All right. Hey, everybody. Ken Satkunam, NorthStar Technology Group. I appreciate everyone who is taking valuable time out of your day to kind of join us to talk about what I think is a very, very important topic, cyber liability insurance. And today I am pleased to announce that I have Andy Runyan, who is the Director of Strategic Alliances at Ukon. Andy's kind of been in this space now for a while. Looks like you're starting to become the expert, the go-to in cyber insurance. 7 years strong into the specific subcategory, and he's been focusing helping organizations like ours, IT providers, make sure that we're providing the right type of protections for our customers. And he's been doing this for a while, and he lives in the great state of Arkansas. For those of you that kind of were eavesdropping before we got started, he's proud and strong from Arkansas with his wife and his kids. And we learned that he can't work at home like anybody else with kids and dogs. So anyway, Andy, welcome. I appreciate you joining us today, and I'll let you kind of take over from there.
Yeah, that's great. No, I appreciate it, Ken, and appreciate everybody hopping on. I know that time's valuable, especially around the holidays. So, kudos to everybody who's jumped on today and taken the time. We will do our best. I will do my best to make sure that the information today is valuable and hopefully applicable. Hopefully there'll be something that you take away from today where you can go, hey, I need to go review this with my agent. I need to talk to Ken and the NorthStar group about this. Because at the highest level, what's been going on is previously, we'll hit this on the presentation today. Cyber insurance, cybersecurity previously were not highly connected, but today in 2025 they are. So if you don't mind, I'm going to share and we will get rolling. Okay. So just to confirm, can everybody see my screen?
Yeah, put a one in the chat if you can, please. I can
Okay,
see it.
very
Oh,
good.
yeah,
Very good.
awesome.
All right. Well, let's roll. So first of all, just the likelihood of having a claim. Like, why are we talking about cyber insurance as a business owner? Um, and I know everybody can read. Former educator here, spent years in the classroom. And I used to always tell my students, if you're given a PowerPoint, you better not read to me off of it. I'm fully literate. So I'm not going to sit here and read you stats. What I do want to is like look at fire. What business doesn't carry fire insurance, right? Every single business that has a physical space carries fire insurance. You'd be crazy if you didn't, right? The bank probably requires it. Well, a cyber event is 14 times more likely to hit your business in 2026 next year than it is for you to have a total loss fire. So, unfortunately, on our end, when we look at the adoption rate of cyber insurance, that number, depending on what report you look at and what sector of the economy, when you get down into the SMB level, which is where I assume everybody on the call is today, cyber insurance adoption is cruising around 50%. When we look at the cyber insurance that comes through our front door that we evaluate, of that 50% that we evaluate, about half of that is what we would consider to be right and good, meaning that it fits the exposure of the entity that we're consulting. So that would mean that roughly 75%, if you believe the stats to be true, of small businesses are either uninsured or underinsured, which is why we are here today. Um, all right, so let's go on into the to the core of the presentation there. First of all, old history guy mentioned that I was coming out of the classroom. And they jokingly say that nobody ever means to be in insurance, that they start in something else, and that's true for me. And when I got into insurance and I started working in cyber in 2019, prior to 2020, there was almost no underwriting. And if you're not an insurance specialist, what I mean by that is the questions that you are asked before you get insurance, right? If you go get auto insurance, I have a 16 year, I have a guy, well, a 15-year-old now that'll turn 16 when he in January, and he's going to start driving. They want to know, what are your grades like? He doesn't have a driving history, but if he did, what's the driving history? Has he been in any accidents? Things like that. Um, Prior to 2020, if you wanted cyber insurance, they didn't ask anything about other than like your name, maybe your revenue, how many employees. There was no questions about controls. Premiums were very low. Pretty much anybody could get a policy, right? Well, COVID hit and cybercrime shifted down to what we call Main Street, right? We started seeing a ton of cybercrime at the SMB level. No business was too small at that point, right? So what that meant was is that for the folks who had purchased cyber insurance, a ton of claims came in, right? And I'm gonna address something from the insurance side of the fence that maybe is not, I don't know, super popular, maybe elephant in the room. Guys, if cyber insurance pays out more claims than it takes in premiums, no insurance company can survive that, right? That's how you go insolvent. We had a scenario for a 2 year period where certain carriers ran loss ratios of over 100%, meaning that the premiums that they took in, they actually paid out more claims than the premiums that they took in. So it's not a good thing for anybody, right? So we started seeing cyber carriers, the carriers of insurance that offered cyber insurance, we started seeing them ask questions about network security. What about MFA? That was the first question, right? Now, what about backups, right? So we started having some basic questions in the COVID years about that. After COVID, the cyber insurance market tightened significantly. And what a hard market means is that carriers weren't wanting to write as much business. Premiums went through the roof. It was not uncommon in 22 or maybe early of 23 for somebody who had cyber insurance previously to see their rate more than double. Not uncommon at all, right? You saw exclusions from carriers. We started talking about things like acts of war, right? Or certain, types of losses being excluded. And then you started seeing what we would consider advanced controls, things like endpoint detection, or kind of not advanced, but second level controls, endpoint detection, security awareness training. Those came into the equation. Also, at this time, and this was a key marker in time, you saw what was called the long form app come out. And what that means is in order to apply for cyber insurance at that time, you were probably filling out questionnaires of at least 30 questions or more, sometimes multiple pages, 5, 6, 7 page apps. And the reason that that's important is that's the reason that Ken's on the call with me today. At that point, the average SMB would get an application and they would say, "Man, I don't know what this says," and they would toss it over the fence to someone like Ken and say, "Hey, help me fill out this application." Ken, have you guys ever gotten drug into a to an application scenario before?
Yeah, I mean, are you kidding? I
Right.
mean, I love this history lesson, right? Because this aligns exactly from my experience, even though we're working in parallel all those years. Prior to this, and yeah, no one had any question, no one ever talked about insurance, and all of a sudden COVID hit, and people are sending over these applications that started out with 3 pages, 2 pages, almost, and it's 10 pages long. So yeah,
Yep.
100%.
Yep. And so today, where we sit today, the market is soft. It is much soft. But we don't call it a soft market. We call it a selectively hard market, and that'll explain. I'll explain that here in just a second. It really does come down to your controls, especially if you're in higher revenue, right? Bracket, or if you are in a sector like healthcare or manufacturing or municipalities, if you're in a sector that's gotten its teeth kicked in over the last couple of years, like if you don't have the right controls, you're going to pay a high premium, right? We do have more carriers now than we had before. We do have a little bit better appetite, but they are offering their own cybersecurity. And guys, I will tell you right now, um, on this call openly as the insurance guy, if an insurance company offers you MDR, say no thank you and go to Ken and say, "Hey Ken, let's get MDR through NorthStar," right? Do not divide your cybersecurity house. Those opportunities for the carriers, yes, they're looking to lower their risk, but they are primarily speaking to entities that don't have a managed service provider. If you have a managed service provider, place 100% of your cybersecurity investment with that managed service provider. You don't need to split that house there. Okay. Um, all right, now we're done with the history lesson. Let's get into the applicable part. Like I said, want to be informative, but we want to be applicable. In my seat, and I work with multiple MSPs, multiple customers of theirs, a week. What are we seeing at the SMB level? What are the questions that we most commonly get from decision makers at the SMB level? Mostly, and I would say these three questions probably make up 90% of the conversations we have when somebody comes to our front door. How much do I buy? What does it cost? Am I overpaying? Am I underpaying? Am I right sized? And then what controls do I need to invest in to make sure that my premiums stay in control, right? So we'll dive into each of those today. The biggest issue right now, the number one issue, is loss quantification. I had a call today with a vendor. We talked for an hour on the issues that businesses all the way up to Fortune 1000 face with knowing how much to invest on the cybersecurity mitigation piece and how much risk to transfer. This is a very, very tough question for business owners today. Okay. So let's look at some reports real quick. And guys, this is, I jokingly refer to the Sophos report as like the John 3:16 of cyber insurance. Sophos, large MDR provider, cybersecurity provider, released a report at the end of last year. I'm anxiously awaiting their 2025 report. But that 2024 report polled thousands of businesses that had had ransomware events and had had breaches and asked them how much did it cost for you to recover, right? The average breach at the SMB level in 2024 was $2.73 million. Now, that SMB includes businesses up into the hundreds of millions, right? And this report includes businesses up into the billions. Okay. So let's break that down and make it a little more applicable. One of the things I love about the Sophos report is it broke it down into, okay, well, what about businesses that made less than $10 million? Guys, that number was still over $1 million. Okay. So when we talk about risk transference through insurance, this report, along with others, have really made $1 million of coverage kind of the low end baseline of what we're willing to offer in 2025. Um, the other thing that I would add from the Sophos report is if a business was not made whole by their insurance, they asked a subset of folks, it was about 3,800 businesses. If you did not recover the full incident cost, the number one reason was that the total cost of the event exceeded the policy limit. Regularly at Ukon, we will see $50 million manufacturers come through our door with $50,000 of cyber insurance, $100,000 of cyber insurance, when in all reality, a ransomware event would cost them well into the millions, right? So, one of the things that we're working on is trying to figure out how do we right size the policy for the business? Not everybody needs the same coverage, right? And one of the things that we do here at Ukon, one of the services that we offer is a customized cyber risk report. We offer that through Ken and his team. One of the things I want to make very, very clear is that Ken and their team, they are not licensed agents. We are. Don't ask Ken or his team what carrier they should use, how much you should buy, anything like that. We will work in tandem with them as licensed agents to provide you that information about the market. Our cyber risk reports provided by Ukon can direct you towards in your sector at your size. This is about what you're looking like at if you're down for 5 days, 15 days, 30 days, and that loss quantification can be helpful. Um, Ken, before we move on to price benchmarking, man, anything on the quantification piece that you'd like to chip in before we talk about the pricing stuff?
Well, first of all, I want to reiterate, yeah, we are not licensed insurance agents. So yeah,
Right.
absolutely not. We work in partnership with Yukon to be able to help with that in that regard. But yeah, I can say that, in our experience assisting other organizations that have gone through data breaches and ransomware detonation events, that I will concur that the biggest issue that we've seen in that regard is just not enough coverage. Even for small organizations, the cost of cleanup of and communication and all those pieces around business usually far exceeds the amount of coverage. So I can definitely reiterate in the real world that is true.
Very good. Very good. Okay, well, let's look at this price benchmarking thing. And what do we mean by this? First of all, before I show you any of these stats or any of these numbers, very clear. This is not, as the insurance guy, this is not Andy Runyan sitting here saying go buy infinite amounts of insurance. That is not at all what we're saying. What we're saying is based on the sector that you're in, based on the type of information that you hold, based on your risk profile, based on the controls that you have in place. Everybody has a different profile or loss potential when it comes to a cyber event, right? Um, Within that, how do I know if I should buy 3 million, 5 million, 10 million, 1 million, and how do I know that I'm paying a fair price, right? This is not a race to the bottom, guys. I see regularly people that shop with price and they'll come into us and they'll say, I pay $900 for cyber insurance. And it's like, okay, you're a $15 million retailer. Do you think, like, let's look at your other premiums? Not $900 for your coverage. It's horrible coverage, right? It doesn't cover anything. So how do I know if I'm overspending or if maybe I'm underspending on cyber insurance? Um, First of all, what I would say for everybody is in the market today. I said selectively hard. There is, and we have access to this data, guys. We can help you. We can share this with you. There's a top end of like what's awful pricing in the market with really really poor controls, and there's a bottom end of like for a comprehensive policy, for a policy that covers what it should, what is like crazy bad pricing, and then what's the lowest pricing available, right? So what we've done here is we've taken a $50 million manufacturer, so not huge but significant, right? And they've decided through their own risk tolerance and the cyber risk reporting that they want to buy $3 million of coverage. Now, that $3 million could, with poor market access and poor control. So, like, let's say you're not working with a Ukon or a specialist that doesn't have good market access. And let's say you don't have an MSP, you're not working with Ken, and you don't have MFA primarily, or you don't have backups, or you don't have MDR. This business could pay up to $48,000 a year in cyber insurance. They could also pay as little as 18. So there's about a $30,000 delta there between the right market with the right type of controls and the wrong market with poor controls. And what we did here is we went on a simulation without Ukon, with poor controls, and just every single year, instead of shopping my risk, I'm just auto renewing that policy. I'm not being consulted. I've got cyber insurance. Sure, let's take a renewal. And on an average annual increase of 15%, which is pretty standard for the market, right? Or we've got really great controls, and we'll talk about this in a minute, but we work with Ken, right? We've got MFA, we've got backups, we've got MDR, right? We do security awareness training. And then every single year that policy shopped out. Now, we even allowed for just a market adjustment of 10% there, right? Like the price of living goes up, right? Inflation is what inflation is. So even with a 10% increase because the market goes up, if you go back and you look at the 10-year escalation here, we call this a premium escalation model, right? And it's based on assumptions. But if you buy in at the top of the market and you just go on an auto renewal cycle versus if you buy in at the bottom of the market and you competitively shop out every year, look at the potential savings over a 5-year period and a 10-year period, right? You're talking about the opportunity to save hundreds of thousands of dollars, and that's for a $50 million entity, guy. That's not a company that's doing 9 figures or 10 figures in revenue. So, price benchmarking, knowing what you could pay versus what you should pay, understanding how your controls play into that, is a major part of the cyber insurance journey. Um, on gap analysis, and this is where I'm gonna involve Ken quite a bit because we'll get into the control stuff here. Um, there is a standard level of cybersecurity through whether it's NIST or your compliance standards or cyber underwriting. Where we're at in 2025 is everybody has kind of said, "Hey, the bar's here. I need you to get here," right? On the insurance side, and Ken, I'll toss it over to you after this and let you talk a little bit about what NorthStar offers and how it aligns with this. But on our end, guys, if you're anything other than the smallest of small businesses, you're going to need multi-factor authentication. You're going to need to backup, and that backup or those backups are going to need to occur daily. You're going to need to patch your systems. There needs to be at least endpoint detection, right? Maybe MDR there, depending on the size and structure of the organization. You need to do security awareness training and have things like firewalls and email security in place. So, from an insurance standpoint, this is what underwriters want to see. And Ken, I'm toss it over to you on how that aligns with what you guys offer there at NorthStar.
Yeah, and for us, of course, we view this as a preventative, a proactive approach, right? Where insurance kind of is that point of we call it right and left of boom, right? So if you're familiar with that,
Right.
where boom is some sort of cyber event, it could be ransomware, it could be data breach, it could be exfiltration, whatever it is. And so where NorthStar kind of fits in on this is the left of boom, right? The prevention and the proactive approach, right? And working with insurance providers through organization like Ukon to make sure that our customers and prospects have those controls. So, I mean, Andy nailed a big chunk of those, right? Obviously, low-hanging fruit like multi-factor authentication across all accounts on all applications, right? Not just your Office 365. Backups, whether that's endpoint backups, server backups, or cloud backups, and being able to have those immutable, right, and separated, right, and protected. Patching, obviously, that needs to occur, but not just on your standard operating systems. It's also your line of business applications, AV and endpoint detection and response. At that workstation, we add managed detection and response, which correlates data and logs right across not just endpoints, but also firewalls and routers and switches. Um, Awareness training is a big part of it, right? Making sure that people are aware of what anomalous behavior looks like and how to manage that. And of course, managing your perimeter with firewalls and email security. And for those of you that have worked with us for a long time, right, know that we deep dive into all of those things and then some. But again, our goal at NorthStar is the prevention side, right? We want to make sure that you have insurance to make yourself whole in the event of boom. And we work very, very closely with forensics and insurance after the fact. But our whole purpose for being is to prevent it from happening at all.
Yep. And so the only thing that I would add here before we get into, because I do, like I said, wanted to make sure things are applicable, right? Make sure that you know what you need to buy to get insurance and to be protected. I do want to get into some common misconceptions here in just a second. But before we get into that, you mentioned left a boom and right a boom, right? Trying to prevent boom from happening. But then if boom does happen, right, how do we transfer through insurance? And then the other thing for the folks on the call that we have not mentioned from the insurance side of the fence, right? And here's a little bit of what what in the South what we call free game, right? Insurance does not give credit. The average insurance carrier does not give credit for an incident response plan. Okay. You don't see insurance give, I mean, insurance will give you all kinds of premium cuts if you put on MFA or if you do MDR or if you have backups, right? So a lot of that left to boom stuff, you're going to get a lower rate for that, right? You might ask the question, do you have an IR plan? It might get brought up by your MSP, but you're not going to see this huge rate cut. I am telling you, if you are on the call today as the guy on the insurance side of the fence that has gone through this with multiple people, and our organization has worked claim after claim after claim after claim, the people who have a offline, regularly annually tested with a pen test incident response plan that addresses ransomware and funds transfer fraud and third party outage, and you've run that through like a tabletop exercise and you've done the thing and it sits off the network and it's ready to go, those organizations handle these events so much smoother than the ones that don't. And I would say that, in my opinion, from what I've seen over the last 7 years, less than 10% of businesses nationwide have those in place, right? So just kind of a little bit of free advice here today. Insurance is really not going to incentivize an incident response plan, but as somebody who's been on my side for years,
Mhm.
and I've actually gone through multiple incident response scenarios, right? Like I just did a game in Louisville, Kentucky a couple weeks ago where we went through a 3 hour simulation. You learn so much. My insurance, may not, and my markets may not like financially reward you, but guys, dadgum, right a boom, having an IR plan and knowing what to
Yeah.
do is going to pay back tenfold.
Yeah, and I can't stress that enough. For those of you on this call that are current customers and have gone through our strategic business review, you've probably noticed that the incident response plan is one of the top items for 2026 if you don't have one already. And a lot of us have gone through, the tabletop exercises, with our team regarding certain scenarios around not only incident but also business continuity. So yeah, I 100% agree. And of course, it goes without saying for our compliance regulated folk on this call, right, that it's required anyway, regardless of
Right.
insurance.
Sure. And I'll say this, and then we'll get into the last bit of the presentation here. As a guy with an athletic background and a coaching background, I still coach my kids. The equivalent to me of not having an incident response plan would be like me taking my baseball team out for a Thursday doubleheader and us having never practiced before, and me being like, "Hey guys, go out there, good luck, go win the game." Having those things in place and having to walk through those scenarios pays off major dividends. All right. Couple things before we run here that I do want to level set on and kind of address some boogeymen or maybe misconceptions. One of the things that Ken and Amber and I talked about when we were setting this thing up was like, what's kind of a misnomer about cyber insurance? What are maybe some misconceptions that our customers have? Guys, in 2024, and we haven't got the 2025 reports in, we had a single claim. We are a nationwide cyber insurance wholesaler that deals with MSPs and agencies across the country. We had one claim under review. Okay. We had no flat out denials in 2024. Okay. Um, Claims are being paid. CFC is one of our largest carriers. CFC paid 98% of their claims last year, right? So what does it mean? What's going on when people are saying like, "Oh, hey, I had cyber insurance and I went to go do the thing and insurance didn't pay out." There's a difference between a denial where they get in and they go, "Oh, hey, you didn't have this, or for some reason you had coverage, but we're not going to pay out." That's a denial and not being fully indemnified, right? Number one, loss quantification. We talked about that before. Get somebody to right size your insurance. If you're a $50 million manufacturer, you don't need a $500,000 policy. That's a number one. The other thing is a lot of these policies have sublimits within them where they'll give a number and it will give the insured the what we call the warm and fuzzies. Oh, I have $1 million of cyber insurance. Well, you go down the policy and it says dependent business interruption, $100,000, right? Let's look at CDK Global. CDK Global is a F&I and CRM tool for car dealers nationwide, right? CDK Global had a massive ransomware attack last year, right? They were down for multiple days. And what that meant was a third-party vendor of thousands of car dealerships was down to the point to where those car dealerships, if they had their full suite, could not sell a car for over 10 days, right? Those car dealerships, when they went to submit claims on their cyber insurance, that dependent business interruption sublimit made the determination on whether or not they were made whole, right? For a lot of high level dealerships that only had 100K or 50K, they were not made whole. They needed that number to be at a million, right? So it all comes down to us. Again, claims aren't being flat out denied. Oh, you bought insurance, you paid your premium, we're not going to pay your claim. What's going on is a lot of folks don't have insurance limits that match their exposure, or they have sublimits or caveats within their insurance that don't align with their risk, right? So just
And
FYI.
and the only thing I want to add on that too, Andy, is a lot of that decision happens at the front end, right, of these applications. So when they go through the
Yep.
process, if there is an underwriting process and they're asking all these questions and they're kind of determining where your risk is, a lot of that qualification happens at that time, right? So and that's what you'd hope, right? Like if you get approved, right, to be part of this club that we call cyber insurance, that if you need it,
Right.
then it would pay out. So
That's right.
from my perspective, we spend most of the time on the front end of that to make sure that the back end goes as smooth as possible.
Yep. And again, a little free nugget for anybody that's still paying attention that we hadn't bored to sleep yet. If you want to know where things are going and where the claims are coming in the most, it's around financial crime. It's around business email compromise. It's around invoice manipulation, right? And very, very regularly, these old insurance policies that have just been renewed, or maybe you had like a cyber toss on to your business owner policy for things like business email compromise, social engineering, invoice manipulation. Those a lot of those policies will only carry like $5,000 or $10,000 of coverage regularly. I mean, I've seen MSPs lose $200,000 on a business email compromise funds transfer fraud claim, right? I've seen an MSP that wired $65,000 to a third party vendor because the lady in accounting saw the invoice and thought it was good. Um, those are very, very common scenarios in 25 heading into 26. So get your coverage evaluated, right? Go look and make sure. I mean, if you're regularly wiring 60, 70, $80,000, it wouldn't make any sense to have $10,000 of coverage, right? Have somebody look through that and quantify your risk. Before we wrap up here, a couple of things on the Ukon end, just so we're clear. Ken and I were talking about this beforehand. Anytime an insurance guy shows up, particularly a Southern guy, an insurance guy with a Southern accent, people are automatically like, I don't know if I trust this guy, right? Number one, we are not in competition with your local agent. If you have a local agent, if they're a generalist and they do your business owner policy and your work comp or your business auto or whatever else, your umbrella, um, a lot of times those local agents really struggle with cyber. And the reason is that it's new and it's super complex. We can be that specialist in their pocket. We can sit over the top of them. They can broker out through us to 57 different markets. We can in turn place the policy through your local agent. So if you're sitting here today and you're going, man, Andy seems like a decent guy. Yukon, I might want to work with them. But my local agent was my fraternity brother, and we play golf every Saturday. Great. Andy, meet agent, right? Like we can work with them. We don't have to, we do not replace them. Okay. So that's a number one. And then two, I mean, I'm probably speaking to nobody here, but if you're just a cyber insurance nerd or if you want to learn more about cyber insurance, we offer a full suite of social media. There's contact information on how you can reach out to Ukon. And then we've worked with NorthStar in the past. We're going to continue to work with NorthStar in 2026. If from this conversation, you've had that light bulb go off that, man, I don't have cyber insurance and I need to get it, or maybe I have it, but I'm not real sure what I have. I don't know if it aligns with my loss potential. You can scan that QR code up in the corner, and I'll let Ken talk a little bit about that readiness consultation that they offer.
Yeah, so yeah, for sure. So I know this has been fantastic, and hopefully it's been useful for everybody to kind of see where how insurance plays into your business and where your potential risk might be. But yeah, the QR code, we'd love to meet with you, talk to you a little bit about your readiness, and that comes from both the left the boom side stuff that we have input and transparency and capability to help you with, but then also to help you work more closely with Andy and Yukon on the policy coverage and evaluations and even working again with your local brokers, but kind of be able to bridge that gap. So yeah, hit that QR code, scan, get some time with me. We'd love to be able to help you make sure that you are covered going into 2026 and beyond.
And guys, what I would say, just a little add on here. Travis Kroger, hey, I'm a cyber insurance nerd.
Yeah, you don't
That's
even want to know some of these questions that we're getting, Andy.
that's
Only
great.
some of them
That's
I can
awesome.
repeat.
Yeah, and we'll open it up to Q&A here in just a second. But before we get to that, one thing I would tell you is if you're listening today and you have a cyber insurance policy through a local agent and that local agent has not met Ken and his team yet, make that introduction, right? In 2019, there was no reason for your insurance agent to meet or know your MSP. In 2026, if your local agent is not working with the cyber specialist wholesaler, if they don't know your MSP, if they're not working in tandem on your business, you're probably leaving some meat on the bone there, right? Insurance agents and MSPs work extremely well together when they understand how they can both benefit. That consultation can benefit the client. So yeah, reach out, get your local agent introduced to Ken and his team, and then we can sit over the top of that relationship to help and support in any way we can. Yeah, so at this point, we've got a little bit here. We've covered a lot of ground today. I know there's a lot of things that we went over. So any questions from the group,
Yeah.
Ken, staff, any questions from you guys? I'm here to answer anything that anybody may have.
If you guys have any questions, just post it in the Q&A. You can put it in the chat if you want to as well. But go ahead and post to that. First question, Andy, is around AI, right?
Hmm.
Obviously we've been t talking now for the
Yep.
last year or so with
Yep.
our customers and prospects about AI,
Yep.
the risk around AI from, not only privacy, cybersecurity, but liability, but then also the benefits and the amazing opportunity that AI creates. How is AI impacting cyber insurance at all? I mean, I hear stuff about social engineering and deep fake, and like, is there any insights at all on what AI is doing to
Yeah.
insurance?
So I'll a couple of things. Number one, AI is constantly evolving, insurance forms and things like that. At the MSP level, agentic AI, like using AI to go out and perform tasks and things like that, it's impacting MSP errors and emissions, right? So one of the things that you want to make sure as an MSP as you move forward, right, is that the use of AI is covered in your professional liability because everybody's using AI these days, right? How it's impacting small businesses, the number one way that I see it impacting small businesses is, guys, you can go online right now and download an AI-based phishing kit for like $50. Right. So the old days, everybody, if you're, I mean, unless we've got folks that are in like their early 20s on the call, everybody probably remembers the Nigerian prince email from the AOL days where it's like super horrible language, like no commas, like, really, really bad. And it's like, oh God, this is a phishing email. Like, why would anybody respond to this? Guys, that's gone in 2026, right? AI is driving super sophisticated language models that can produce emails that sound really, really well. I mean, there's voice right now that you can leave. We had an example in an IR plan where somebody used AI to simulate their voice and send it through text, like, "Hey, I'm out of office. I need you to pay that invoice that I just emailed to you, but just go ahead and send it over." Social engineering. We talked about the crime piece, social engineering, business email compromise, invoice manipulation. Those types of claims are driven by AI. If you go back 4 or 5 years ago, what you saw was like ransomware was the big talking point. It still is, right? But what AI's done is it's driven the types of claims further into, hey, we're going to fake an email and instead of hitting you, for a large ransomware event, we're just going to pray and spray and try to get 30 business email compromises taken care of, right? At 10 grand a pop or, 20 grand a pop. So making sure that crime coverage, when you ask how does AI influence cyber insurance, make for darn sure that your social engineering, business email compromise, invoice manipulation coverage matches the transactions that are going through your organization. If you're wiring 400, 500, 600K, right? You need to go out and get cyber insurance and probably an additional crime policy. Make sure that you have that exposure covered.
And I just want to add to that that's kind of the part of the process that we go through with our AI growth and profit assessment is to evaluate, just like we do with cybersecurity risk, what your AI risk is, and that kind of works in conjunction with cyber insurance coverage. And although I'm not in my early 20s, I'm just in my late 20s, Andy. Um, just
Me
kidding.
too. Yeah, me too.
I do remember the Nigerian prince.
Yep.
All right. Next question is what is your prediction of the cyber market for 2026?
And this is a hopeful prediction. I believe that we will see a harder market in 2026 than we did in 2025. There was this massive appetite in 2025 And to a degree, especially at lower revenues, it was almost too easy to get cyber insurance, right? I really do think through, and this ties back into AI. I mentioned earlier on the call that insurance didn't care if you had an incident response plan, but how impactful IR plans were. One of the reasons that insurance didn't care if you had an IR plan previously is they didn't want to read through them. Well, guess what? You can use an AI tool to read through a 40-page incident response plan now. So my prediction for the cyber insurance market in 2026 is that it tightens a little bit, it hardens up, premiums will probably increase, appetites will tighten a little bit. And I think the reason I think that is go back 2 weeks ago. I don't know. I mean, apparently we have one cyber insurance nerd on the call, but I don't know how many people pay attention to things like this. But like Beasley is a huge carrier in the history of cyber insurance. You go back 2 weeks ago, Beasley comes out and says, "Hey, I think the word was reevaluate their posture or their position in the cyber insurance space." They didn't come out and say we're stepping out or it's non-profitable for us, but they used some very thinly veiled language that was like, hey, things aren't going exactly how we would like them to, right? When one of the big dogs says something like that, that's a pretty good harbinger of things to come, which is more than likely tightened appetites, higher premiums, especially if you're not doing if you're arguing with Ken, if Ken's telling you need to be doing X, Y, Z, and you're like, yeah, we'll do X, but we're not doing Y and Z, get ready for your premiums to go up. That's my prediction for 2026.
Fair, fair. Anybody else have any other question? I
I
got
think we
one here
saw
that,
one. Yeah, go ahead.
well, I just got one here that just says, I heard that this Ken character is shady. I like to see his resume. That's one of my former employees, Luke Sunstigar, so I'm going to call him out right now. Can someone boot him off the call, please? I'm just kidding, Luke. Good to see you again.
That's great. We've got one that
Yeah,
came
one
in that
more.
says, yeah, I
Yeah,
was about to say, did you see that one come through? Go ahead.
are carriers starting to ask for proof of the steps you've taken on the protect side, or is it still an honor system? Obviously, you have to answer these questions right on the application.
Hmm.
How are insurance providers validating that this stuff is actually being
Yep.
done instead of just checking
Yeah.
marks?
For sure. Well, first of all, what we saw is we saw a shift in how the questions were asked, right? In the early days when we were coming out of COVID and all the carriers were going, oh crap, we better start asking better questions or some questions at all. The questions were like, do you have MFA? Yes or no, right? And that may not seem crazy to anybody on the call, but to Ken, I know that like okay, MFA on email, MFA on
Yeah,
backups. Like, what do you mean, yes or no?
yeah,
That's not a binary question, right? So
correct.
now what we've done is the questions have evolved. We talked about the apps getting longer, right?
Yes.
Do you have MFA? Where is it located and who's the vendor? Those are the type of questions, right? So what ends up happening in the event of a claim is you will have, like, let's say you have a ransomware event, you claim insurance, and the carrier number one is going to come in and they're going to bring in a negotiator. They're going to bring in forensics. They're going to bring in legal, right? And guys, this is not, again, let me go back to the statement. CFC paid 98% of their claims in 2024. This is not a gotcha moment. They're not trying to go in there and go, ooh, what can I find so I don't have to pay anything here, right? It's a discovery mode, right? They're getting in there. It's a crime scene, right? So
Yep.
one of the things we always tell people is like if you walked up on a crime scene and there was a dead body and blood laying everywhere, you wouldn't start going there and start cleaning up blood before the cop showed up, right? Same thing for cyber. Don't just call your insurance company. Hopefully, you've talked to them beforehand. We really do suggest that you talk to the claims department beforehand. That way, you know what you got coming at you. But anyway, they're going to send down a team that's going to essentially say, hey, like, what's going on here, right? Now, when we talk about the application, again, do denials because of lies on the application happen? Yes, absolutely they do, right? And what that's going to come down to is it's going to come down to is it a gross misattestation or is it a slight, in a gray area? And what I mean by that is, let's say I said on my application that yes, I had MFA on all emails, right? And I had just onboarded a client and man, maybe they didn't have their MFA set up and that was more than likely that's not going to be just a flat out denial. We represent 57 carriers. I can't speak in absolutes, but more than likely that's not going to be a denial, right? What they will look at is like if you go in and you check, yes, we had MDR, and that's a yes, and they get in there and there's not a stitch of MDR anywhere on the network, absolutely they're going to check that, and that can lead to a denial. So gross misattestation is just flat out lying and being like, openly incorrect on an application. You can have a slight misattestation, and what those usually lead to is a lot of times the claim is paid. You may or may not be renewed. You may have to go find another carrier, right? But guys, there's over 50 cyber insurance carriers. If you've got the right broker and knows what to do, you can find another policy.
Yeah, kind of the next question is a little bit of a segue to something you mentioned just a little bit ago, around, if you came upon a murder scene and saw the body and blood, you
Mhm.
wouldn't just clean it up right away. And obviously, kind of mapping that back to what we're talking about kind of is impacted by that incident response plan. What do you do in the event of an incident happening? And obviously,
Yep.
the first step isn't to clean up the blood and to take the body away, right? So it's
Right.
building that process. So from insurance provider's perspective, obviously from a cybersecurity perspective and a recovery perspective, we have, what we would like to see on an IR plan. But what are insurance providers, or what
Yep.
are you seeing that dramatically improves a customer's right of boom response and
Yep.
recovery speed
Yep.
based on what's in their IR plan?
Yep. And it's I don't know if you realize this or not, but we had almost that exact. I mean, I don't know if you're
Mhm.
surmising the question that was answered there, but we had
Yeah.
the question asked. What should I? It says, is there a standard set of information I should have on my IR plan? Do all the carriers request I do the same thing? First of all, no. The answer is patently no. Every carrier is gonna have their own thing, right? Like. Some of them aren't going to ask about an IR plan at all. Some of them will ask and not care. Some of them will say, "Hey, we want to see X, Y, and Z." Here's our stance, right? Number one, you should have an annual pen test, right? That pen test will tell you where the cracks in the network are. It'll give you a really good look on what to do. From that pen test, right? You should run a tabletop exercise where you go in and you're like, hey, this is what we work. Ken mentioned this earlier, right? And out of that pen test and tabletop exercise, you should have an incident response plan that is a living, breathing document, right? Not a template that you just slap your name on, because an IR plan for a manufacturer is going to look different than an IR plan from a hospital, which is going to look different for an IR plan for a wholesaler, right? So anyway, what I would say, if we're going to try to paint with the broad brush, what will do the best, right? Is communication trees. Who do you call when? Having information on that IR plan about call the carrier ahead of time. Who's my log? Who are my approved lawyers? Who's my approved forensics? Right? What does my insurance policy say? Who is it through? Who's the claims hotline? All that stuff needs to live off the server. And I know that sounds stupid, guys, but like if you are in the middle of a ransomware event and your IR plan's on your server, you don't have an IR plan, right? Like you don't have access to that. So it needs to be a living, breathing document, it needs to be off of the server. And then what I would say is like best practice, and I'm gonna tattle on the industry right now. I don't feel like the industry addresses this well. For Andy and for Ukon, we want to see ransomware addressed. We want to see third party vendors addressed, and we want to see a business email compromise scenario where money has gone poof addressed separately as different events, right? What do I do if we get hit with a ransomware event? Who are my primary vendors that I'm most revenue dependent on? What if they go down, right? Do I have a backup vendor I can use? Do I have another source of revenue I can chase? And then lastly, if we wire money or money stolen from the organization, who's my bank? Do I notify the receiving bank? How do I report that to ic3.gov? How do I involve my MSP, right? If we can silo out those three things and have a plan around all three, you're going to catch probably 90% of the claims that we see come through the front door through planning and our discovery.
Yeah, I mean that's a great answer, and just to add on to that, and I mentioned earlier, how we kind of I don't want to say combine, right, but work in conjunction with the business continuity plan, which is a little bit different, right? Because at the same time, IR is handling these incidents, but then once we do get to a recovery, how does that recovery priority go? Um, I have just one more question, and I'll let if someone else has, we have a little bit of time, but a long time ago. I'm not going to say in a galaxy far, far away, but a long time ago, we worked with an organization that had a vulnerability exploited. They were a data center. They had a vulnerability exploited that ended up in a ransomware event that impacted not only customer servers that were hosted with this data center, but also backups, right? And so during that process, of course, they went through cyber insurance, they went through the forensics part of that, but as part of the recovery, they worked with an organization, part of insurance, that ended up doing the negotiation for a ransom payment, just because that was
Okay,
the option they had. And in that
sure.
event, they discovered that they had to front the money for the ransom payment, and then only after that were reimbursed.
Hmm.
Do you have any advice on helping people understand, like, even if something is technically covered and you are maybe fully indemnified, but there's an
That's it.
order of financial transactions that may need to be considered? That was a huge
That's
surprise to
it.
them. They had to end up paying like
Yeah.
150K just to cross their fingers that they would get that reimbursement on the back end. Do you speak to that
Yep.
at all, Andy?
So yeah, 100%, man. That's the key. There is there are two types of cyber insurance policy. There are an indemnify policy and a pay on behalf policy.
Mhm.
You want pay on behalf if you can get it, right? Pay on behalf. In that scenario, the negotiator would have paid the ransom and that would have been taken out of their limit, right? And there wouldn't have been that reimbursement. That's again, that's pay on behalf. An indemnify policy or a reimbursement policy, you got to front everything. You got to pay the lawyers, you got to pay the negotiator, you got to pay the ransom, all that stuff, and then you turn the bill, submit the bill into insurance. Insurance makes it back. So in that scenario, you better have some cash on hand, or you better have a bank that's willing to front you a loan to get all that stuff paid for, right? So yes, there. I mean, it comes down to how the policy is written. There's both that indemnify and pay on behalf. What I will tell you is that don't I hear this out in the channel. I hear it in conversations. It's like, oh, well, um, uh, you know, Travis, this is a good point here, and thank you for throwing this in. A lot of pay on behalf carriers that reimburse extortion so they can stay out of the OFAC regulations and penalties. Right. It goes back to the idea that, every carrier kind of handles it their own way. So just be aware that insurance can react differently depending on how the policy is written or the carrier responds. Thank you. I appreciate you tossing that in there, Travis. Um, but long story short, there's this narrative out there that's like, oh, insurance takes forever to pay out, right? Well, by design, there are some things that should take forever to pay out. When you look at things like reputational harm and there being a 6 month claim window for that, right? Let's play out a scenario where a manufacturer has a ransomware event and they've got a vendor that only orders with them every quarter or so, right? So they have a ransomware event, but it gets out into the customer base. And when it's time for that customer to make their order in the next quarter, 2, 3 months down the road, that vendor or that partner comes up and says, "Hey, we heard about this ransomware event. We've been courted by another group that they have this cybersecurity posture and all this stuff, and they've told us that they take our data seriously, and we're going to go with them, right?" And that's documented on email. That can be a reputational harm claim, right? So by design, when you look at things like business income, reputational harm, cyber insurance is meant to sit and dwell for a time, right? I know everybody wants their money back when they want it back, and we get that. And insurance can do that in certain scenarios. But there are other scenarios where, by how the policy is written, it is meant to sit and fully indemnify over time. And sometimes that can take months.
Yeah. All right. Anybody else have any other questions at all for Andy while we have him? Um, we will be sending out this recording, and like I said, if you guys are interested in kind of getting a right size of baseline of where you stand regarding this stuff, please book some time with me. I'll get you connected with Andy and Ukon if necessary, and I'd love to be able to help you guys out. But any last words of wisdom before we let everybody go?
Man, no, this has been great. I think covered a lot of ground here. Really appreciate the questions from the group. As an old educator, I love when we get into the discussion side of things. Right, that's when the real learning occurs. So, really appreciate the questions from the group. And again, I said it before, but I'll say it in closing. Thank you guys for taking the time during the holidays in an extremely busy time period to hop on here and learn about something that's a very important and evolving topic.
Yeah, no, thanks. I appreciate it, Andy. And like I said, if anybody has any additional questions, please follow up. Otherwise, give everybody five more minutes of their day, and we'll be sending out this recording. But thanks, everybody.
Thank you.